Hey everybody, I want to go over and help you guys and teach you how to scale your manufacturing business, what programs you can use, and what's the right way to do it. So, let's talk about a little bit about how to actually scale it and what are the steps you need to put into place to get it done. All right. So, first, you got to uncover the challenges, right? Because if you don't know what the problem is, how are you going to solve it? So typically, when you run a manufacturing business, you're waiting 30 to 60 days to get paid for your invoices. All right, and what that does is it'll essentially have you turn away jobs because you don't have the cash on hand to start or work on multiple jobs at one time. And it could lead you to saying no to larger orders or jobs because there's a shortage of cash. All right, this also creates a challenge because you're trying to bring on more people to increase your capacity and buying new equipment to increase your capacity. But when you are waiting 30 or 60 days to get paid, it's harder to have that cash on hand to get new equipment, to start new jobs, to bring on more people. So let's break these down individually, right? It's all going to come down to your money flow. The faster you can increase the velocity of money, the quicker you can scale your business. The more equipment you have, the more capacity you have, right? So if you're always upgrading your equipment, getting new pieces of equipment, it's going to allow you to be a lot more efficient and take on more work. So let's talk a little bit about how to increase the velocity of money going in and out of your business. The first way is you can factor your invoices, all right? Essentially, you can be advanced on your invoices to increase the money flow and to scale your operations through invoice factoring. Okay, you can get the funds in 24 hours after you submit an invoice and move on to the next job. So let's talk a little bit about how invoice factoring works. So basically, you'd be set up with an online portal. You submit the invoice, and in 24 hours, you get an advance on that invoice. Typically, the advance will be anywhere between 80 and 90%. I've actually seen it as high as 95%. All right, the rest or the difference is kept in a reserve until your client pays the factor. All right, and the way it works is they'll charge a small fee, anywhere between 1% and 3% by the factoring company. All right, so let's break this down in an example to make it very, very clear and easy to understand how it works. So your client has net 30 terms and they just sent you an invoice. So you did work on a $100,000 job. You have 3 other jobs you want to start, but you don't have the cash on hand to start them. So what you would do is you would factor that invoice. Let's say they give you an advance rate of 90%. So you submit the invoice. The next day, $90,000 is advanced into your account. And now you have the cash to move on to the next 3 jobs instead of waiting. So what will happen is now the client will pay the factor, okay, at the end of 30 days. And then the factor releases the reserve minus their fee of 2%. That means the factor is going to keep $2,000 and you're going to net $98,000. Okay. When they release the reserve, the fee is taken out, so you will receive 8 out of that 10,000 that was held in reserve. All right. So what's the benefit to you? Well, instead of waiting 30 days, you were able to take on the other 3 jobs for $100,000 each. Okay. Even if you factored those orders, okay, your monthly output went from 100,000 to 400,000. All right, and if you want to look at net terms, what it cost you versus what you gained, okay, if you submit all 4 of those jobs or invoices for invoice factoring, you had gross revenues of 392,000 instead of having gross revenues of 100,000 for the month. Now you can see why this program is so vital to help you scale your business. All right, so let's talk about what's needed to set this up. It's pretty easy. You need a 1-page Sprout application, a detailed accounts receivable report, your 2 largest customer contracts, your articles of incorporation, and a sample invoice. After that, I could get you a term sheet in 24 to 48 hours. All right, what are some of the other advantages? Well, the factor is going to handle most of your ongoing collections for your company now. Okay, they're going to give you streamlined reporting, and it's going to allow you to scale your business much quicker. This is very common among the larger manufacturing companies. All right, now let's talk a little bit about how to handle the equipment challenge. Okay, it's very important to always have new and up-to-date equipment in your manufacturing facility. So what you want to do is you want to use equipment financing to do that. All right, essentially have someone purchase the equipment for you, okay, with little or no money down, and then you can finance it over 1 to 5 years. Okay, this will allow you to increase production and stay up to date with the facilities. All right, the whole transaction might take 24 to 48 hours to get an approval, and then 3 to 5 business days to get the whole transaction completed. So how do you apply? Pretty simple. 1-page Sprout application, 6 months, business bank statements. You need the equipment invoices you want to purchase and the business tax return. Typically from there, again, only 24 to 48 hours to get terms.